What's up, guys? Welcome back. Today is Monday, the 24th of January. This is going to be a pretty big week because of all the news events that are coming out. So let's just be cautious about that. But yeah, this is just going to review today just quickly in the Telegram. So you can join it right now at Liquidity Trading. Okay. And essentially let's see what we were looking at today. So this is what I was looking at to start off the previous night. I wanted to come see these previous weekly lows get hit. We had 1, 2, 3 runs up into this POI, and I wanted to see just one last sweep deeper into this level and then go. But I woke up and price just kind of left the station and just kept going down. You can see in London, we mitigated this level here. We swept all this liquidity, dabbling up into it and then breaking down. It responded right from this breaker block here. You can see, but it just couldn't go. It couldn't go from here. So what did it have to do? Come back down into this low, right? It's a weak low, structural low. So this was a big target. And eventually, again, saying that there was the major liquidity pool there. Longs are super risky here. You wait till that gets tagged out, because that's going to be the major weekly liquidity pool. We look at dollar index higher time frame. You can see we mitigate off of a breaker block here. Beautiful structural setup right here where we have a consolidation. Let me just draw it out for you so you can see. Where we have a consolidation, we have our manipulation right here, and now we're looking for our expansion up to take out this liquidity, and then potentially even all the way up there. But first one is going to be right here. You can see that we have some Fibonacci confluence there too with the Fibo there, and you can see, oh yeah, right here, this is where I drew it out, right? Consolidation, manipulation, distribution, coming right up to that 97,800s. That's what I'm anticipating on dollar index. So again, this is where I pointed out where for intraday, I'm looking for price to get up above here, that sweep, and then dabble into this leg potentially. And then from there, we'll probably get a pullback, which if that happens, then we can go for longs on EU. So we see that the previous week low gets swiped. And then I would just show the news events. And then I said right here, okay, let's see how price reacts around these levels right here. Okay. Sweeping weekly lows is an area of significant liquidity. So if there's any confirmation, it could offer something like a 20 pip plus move out. So wait for confirmations, and then that's it. Right here, we came back up. You can see mitigated this. So it was just efficient price action. I wasn't too interested in that yet. So I said, no, nothing. I'm staying out right now. And then I said, you know what, if it breaks through here, there's potential that we sweep all this and come into this level, which we knew that right from the beginning. So I just said, wait, and you can see a couple memes were going on here. And then here was a trade that I just marked up. I didn't actually take this one just because this is, again, we swept the previous weekly low. So I was anticipating more upside, right? Or I wanted to see more upside as opposed to downside. This was just there. So I just decided to take that photo. And I said, yeah, I was eyeing these. I didn't take it, but it's a higher risk trade, but the setup was there. So anyways, let's see. And then, yeah, right here, this was the high probability setup. So once we get the weekly sweep on liquidity, what ends up happening was we had this kind of consolidation. We had this breakdown lower, and then all of a sudden we have our break of structure, right? We broke this structure. We have our inducement, mitigates, consolidates again on a smaller time frame, sweeps, breaks up, mitigates, breaks up, mitigates. And then this one right here was the confirmation, because we had a lot of confluence right here to target this level up in here, take out all that London liquidity, right? This is London's high. And then this was in New York's low. You can see what the time was. 9:30 a.m. caused the sweep. And then that was the move up. That was the anticipated move up. And essentially, yeah, that's exactly what happened. And you can see that the end of the day ended off, and I'll just take that out. You can see the end of the day ended off beautifully right up at that level, which this was, I marked out this whole block here. And then I later refined it to just this. Okay. But you can see that this is exactly where price came down from. So just to, again, recap the day on the actual charts, right, of what you could have been thinking along the way. One of the things that you can see right here is this is beautiful, right? Which is the leg that led to the sweep on liquidity. And you can see that we have 1, 2 up candles that caused this sweep and mitigation on the 1 hour. And then you can see if we were going to go up, we were going to go up from right here, right? We were going to go up from right there. What ends up happening was we break through it. We retrace it back into this breaker block now for more downside to target these lows. Okay. So the first thing that if I were trading in London and it would have been right here. What I would be anticipating is at least a move back up into here, right? At least a move back up into the breaker. And then what you have is you have, you can look for targets down here, right? If I use my fib, you can see pull down here. Of course, there's a lot of confluence down there, which again, it still might get back down to there right now. But overall, this was the previous week's low right here. Okay, right there. And so that's going to be your first target. That has to be, first of all, right? It's this structural level, right? Where this is the low, high, and then right there is the next low. So that's where you're going to be targeting. Plus there's that POI. Of course, it's not the best POI because we have these equal lows, but like I said, I was anticipating only a pullback from it anyways. Like even if it goes up to here, I'm still only anticipating a pullback from this POI. I still believe that at the end of the day, even if we come back up and take out all this and it comes up like this, I believe at the end of the day, we're coming back down and we're going to mitigate, we're going to be taking out that. So that's going to be the main trade idea. But I said that we could get a decent bounce from here, right? Like we swept weekly lows, mitigated some imbalance here or filled up some imbalance. And now from there, what's the next play? And the next play ultimately was upside for me. So again, if you're looking at London, right, you have these intermediary highs. Let's see on the 1 hour again. Sorry, was there anything? Yeah, there's this right here. Okay, so there's this little high right here. Again, we only take trades after inducements, right? And so you can actually take this, right, your breaker block, and you can modify it just to that because that's really the last candle. I guess like you can probably find something a little bit cleaner than that. Let's go to the 45 maybe. Yeah, so you can see that this was really the actual block right there, right? And let's go to the 15, see if there's anything else clean in here. Yeah, really this last up candle mitigates, come back down. Where's the structural point? Right here, right? This breaks through. This was that point that really pushed price through, right? Whereas this just consolidated here. So this is likely to be swept. It gets swept. We have these highs now inducing it, and then we have continuation down. So interesting, not really the best point of interest, to be honest, in here. I'm just trying to find something so then it makes sense. But in real time, yeah, in real time, I would literally just have this marked out, these last series of up candles, because what this is an order block on a higher time frame. And so as soon as we break past below it, you can see it was never really mitigated back into. You can see it was right here a couple times, but it wasn't, it hugged it first. Like I like to see a nice clean breakout like this, and then a tap in, and you can see it just never happened. So this was just basically inducing it. And then you can see as soon as we get up there, we induce it right at, what time is that? 4:25. A little bit late, to be honest. I would expect, yeah, like I would have expected this one to get up there and do it at 3:30, but this came up at 4:30, and then we continued the downside. Let's see on the 1 minute if there was anything. No, nothing of interest to me, honestly, other than the fact that as soon as we swept structure here, and then we broke, right, this is the breaker block, you can see that we mitigated that right at that level too. There's this order block that broke through it, just like that. And then we continue down, and we just continue down making, efficient price action. Like just it broke down and completely went down efficiently until we reach this point where, again, this is the weekly low right here. And so this is where we were observing price for longs. And so, yeah, like you can really just mark it out and just say, okay, well, how is it developing here? 2, 3, 4, 5, right? And so again, this is going to be your main structural point. And that's precisely why I didn't take this one right here. This is a valid trade. And again, we actually talked about it on the previous backtesting of the WWA trades. And I said, I'm like, these are the trades that I don't take. Like I don't take this one from the low here. I want to see some more structure break, because realistically, all this broke was this one and this one. If we look on the 5 minute, I don't even think it was any 5 minute structure that it broke. Yeah, I guess, okay, you can say that it was the 5 minute structure, and you can say that realistically, this is the high probability order block right here, this last down candle. So as soon as that happened like that, you could have taken, you could have been looking for longs from there. Personally, I wasn't, because what I saw in the works was, first of all, you can see, like, look at this divergence forming on just the TDI here, right? All the way, just forming. But again, this is what's going to trick people into trading, right? Because you're going to see, oh, divergence. Okay, let's take this structure break here and let's go. Oh, and then that fails. And then you see another divergence. Okay, now it has to be this one. Structure break right there. Let's take this. And then that fails, right? And the next one, finally, this is going to be the one that goes. And you're not even going to want to take it anymore because you've already taken a couple losses. And so that's why I don't just rely on this. It's just more of an extra layer of confluence. Whereas I look at the dollar index, and what I see here is you can see dollar index makes a higher high right there. At the same time, EU makes a higher low. So we have a crack in correlation here, and then we break structure right here. Okay, we break structure right here. And so basically what that shows me is that this is ready to go down. So essentially what I did was I was looking at this right here, this order block in here. And sorry, 1 second. I was looking at just how price was consistently mitigating right here. And then this, when price broke up and finally took out this structure right here. At this point, because this should have held, right? If we were going to continue down, this could have been inducement up here and then go. But no, it wicked through it. So that just tells me, okay, that I think we're going to be looking at these highs now. And ultimately, where is it going to come down from? Well, probably right here, right? This last candle here, you can see on the 5 minute, where was it? Yeah, right here. So on the 5 minute, it's within this candle, right? This last down candle, which is an order block, which mitigated out of this order block. So we have one mitigation, and then this is going to be the second mitigation. That was the one that I took. That was the one I was really confident in. So I took it. Yeah, sorry. This is where it was from though. And it was based off, stop loss was based off of that right there. Okay, so just a 6 pips. Again, not the tightest of stops. I mean, I probably could have just done it like this, right? To be honest, just off of the 1 minute and just have a 3 pip stop. It's just, again, it was just happening in real time. And I was just focusing on the 5 minute really, and just using the 5 minute levels, but just refining it down on the 1 minute. And so I just put my stop rate down here. And again, this was the target up here. Right? So boom, there it is. What is that? 5.5 hour basically. We stalled right here where there was, you can see right here, there was a high. And then this was an unmitigated level right here that never got tagged into. There was a nice little imbalance there. And you can see that's why that reacted. We came right back down. Where to? After we swept this liquidity, we come right down into a level of imbalance right here. Right? We dabble into that imbalance. We sweep this low right here. And then on the 1 minute, you can see we break structure, right? We sweep and we break structure. These are the last consecutive down candles, right? We make these equal lows really, and then we break structure and we just continue up to our target. So yeah, that's basically it, guys. I mean, there was nothing, I mean, it was really a slow kind of day other than everything that happened just down here. But again, this was a really good setup. It's something that you definitely should study and definitely should log. It's a really good one. And then obviously here a little bit later on, I wouldn't be trading now at this time anyways, but you can see here we got that sweep, break a structure. I would have anticipated something to come back up into somewhere up into this imbalance. That's what I would be anticipating, and up into this block here. So maybe potentially that's what's going to happen. And then it's going to yield in a deeper retracement to take out these lows and get back down into these levels before going up, or we're just going to come down and rinse all these lows that we have over here. So again, I just want to keep this one super short. No need to be going in too much because that's basically all that happened. So let's just look at what's going to happen or what I'm anticipating. Well, we'll see how the daily closes because it's not closed yet, but we'll see. I don't think that this is going to go up yet. I think that all of these now, we just have so much liquidity pent up here. We have structure pooling or pushing down here. So I do believe that the next level that's going to be hit is going to be first off this one here. And and then potentially all the way down. Again, this is my target. I think that this correction is done, right? We had our consolidation, we have our sweep, we come right back into it. So if we can break below this, we're probably going to get back somewhere up to here, and then we're going to start really moving down to start taking out these lows. So just keep that in mind. And yeah, that should be pretty much it, guys. Yeah, that's it. I can't really think about any, or can't think of anything else. So I hope that was good. Just a quick review for today. Yeah, this is going to be a big week of news. So just be safe and make sure you're not over risking or taking stupid trades. You know, this is where people will get burned this week. So just keep that in mind, and we'll be back tomorrow. All right, guys, have a good one. Cheers.